Apple is partnering with OpenAI and Elon Musk. Not happy. The Tesla CEO announcing in a post on X that if Apple integrates OpenAI in its OS, he will ban devices at his companies. Musk went on to call the partnership an unacceptable security violation. During Apple's Worldwide Developers Conference keynote, Apple announced ChatGPT will be available for free in both iOS 18 and Mac OS Sequoia. In a statement, OpenAI CEO Sam Altman, who appeared at the conference, expressed excitement at the partnership.
Coming up today, an update on Roaring Kitty, the latest products from Apple, why Elon Musk is threatening Apple, what happened to Nvidia, why Treasury yields are rising, this week's agenda, and French stocks fall on political drama. Hey, what's up guys? Welcome back to the Daily Market Review. Hope you all had a great weekend out there. And once again, thanks to everybody who hit that like button as we hit another new all-time record on the Daily Market Review on Friday's show. Over 15,000 people across all platforms tuned in. So thanks to everybody who helped make that possible. And let's dive right in to start this busy week off in markets. S&P 500 and all indices finishing higher here today, firming up on a little bit of a bullish flag formation and better bullish breadth across the board as well. We've got the Nasdaq sitting at all-time highs. Bit of a buy the dip on the Russell 2000. Moderate volume breadth. We've still got more stocks hitting new lows than new highs today. VIX popped up to start the week, as it often does. Treasury yields pretty much sitting flat, along with Bitcoin. Bit of a sharp move up into crude. And stick with me because I'll get into all the other charts later on in this video and give you the bird's eye view across all financial markets, so you know exactly what's going on out there. First, let's just quickly follow up on my coverage from Friday's show into GameStop and Roaring Kitty. And like I said on Friday night, I think GameStop could come back down into the support zone from $20.74, which was the offer price for their last secondary they did back in mid-May. They just came out with another secondary offering of 75 million shares on market. So they're selling them on market. Caused the price to fall 40% on Friday, and we're down another 12% in regular trading session today to 24.83. And Roaring Kitty just posted an update on his Reddit account. He's still a hodling, 5 million shares, still got that monster position of 120,000 contracts and call options expiring on the 21st. Everyone's wondering what he's going to do with them. And since he paid $567, his break even is plus the strike, so that's $25.67. So he's a little bit underwater now in the intrinsic value of those options. They've still got a bit of theta and time value left on them, but not for long. So if he exercises them, that would be 12 million shares. He'd have to sell some of his position in the underlying stock. He does have 29.5 million in cash, and everyone's wondering whether he's going to exercise them or sell them and roll them out. However, as it stands today, he's still got an over $200 million position in GameStop shares and options. Absolutely monster position. And apart from that, he's just posted a couple of memes over on X. There's a good one right here. You were a billionaire. As for a brief moment there in post-market trading on Thursday night, when GameStop went running up towards $69 a share, he was temporarily a billionaire on paper, and it seems he's not holding back. Just posted a meme a few hours ago with a shot taken from the movie The Dark Knight, in which the Joker is just about to enter a bank and rob it, and he's replaced the Joker mask with a cat mask. And then he's labelled the building Citadel, one of the biggest market makers in the world, and on the other side of most GameStop trades with brokers like Robinhood and so on. So he's not been shy and stepping up into front of the street here, and so this saga continues. However, enough of GameStop and Roaring Kitty. We dove deep into that on Friday night, and I'm sure we'll be touching on it again this week. Let's get into the biggest event of today, the long-awaited, highly anticipated Worldwide Developers Conference by Apple. Running all week, kicked off today, in which they unveiled all their latest products and developments, most notably integrating OpenAI's ChatGPT into their products with Siri and just Apple Artificial Intelligence. Basically moving towards having your own personal agent, so you could think of ChatGPT as like a generic chatbot that you can talk to, ask questions, general information. Whereas the way Apple's going, you'll basically agree without really knowing, because no one reads the terms of services. They basically follow you even more than they currently do, watch everything you do, really get to know you, and then via AI technology, you can talk to it on a more personal level and just speed up mundane tasks and other things like that. And they came out with simple little widgets that you can create your own emojis and other things for editors and creators. And so it's controversial about their use of data. On one hand, if you're not too worried about your invasion of privacy, Big Brother always watching you, everything you do, then it could be good for being served up relative content and having like your own personal assistant. Some people say it's gone too far with an invasion of privacy, and where does it stop? How far are they going to go? And along with that, they update a new operating system for their Apple Watch, updates for all their products, iPads, AirPods, the iOS 18 operating system for the new iPhone. And so even though Apple's had hundreds of billions of dollars in cash over the last decade, they could have developed their own chatbot, their own AI. They said they were going to do an Apple car. They couldn't pull it off. They've pretty much just given all that cash back to shareholders and goosed up the stock price without really creating any new groundbreaking technology themselves. They're just latching on to much smaller companies integrating their technology, like ChatGPT, headed up by Sam Altman, who says he's very happy to be partnering with Apple to integrate GPT into their devices later this year. However, who's not happy at all about this? Elon Musk, who 10 years ago helped to get OpenAI and ChatGPT off the ground with his $100 million investment. He thought he was investing into a company that was going to promote artificial intelligence like open source, make it open for the benefit of society, and to study it and to prevent it from getting in the wrong hands and one day becoming dangerous. However, it took a bit of a turn and has become sort of a closed AI for profit, mostly owned by Microsoft, now partnering up with Apple. And Elon doesn't like this one little bit. He even came out next today and threatened, if Apple integrates OpenAI at the operating system level, then Apple devices will be banned at my companies. That is an unacceptable security violation. So that's a pretty big threat. And Elon, the richest man in the world when you count all of his shareholdings across his companies, not just Tesla, but also XAI, Neuralink, the Boring Company, and possibly his most valuable one for the long term, his stake in SpaceX, which is going to be IPO'd some point in the next couple of years. That owns Starlink. All his staff won't be able to use Apple, but more importantly, Elon, in addition to a lot of financial capital, has a huge amount of social capital with almost 187 million followers. And so last time he came out and spoke against Apple, Tim Cook scrambled and invited Elon to the headquarters straight away, as there was speculation after Elon overtook Twitter, turned it into X. Apple was going to ban X from their app store, potentially on some technical woke policy or something like that. However, they decided not to because I think Tim Cook's smart. He didn't want to turn all of Elon's fans and create a divide in society and smear Apple's brand. It looks like Elon's trying to threaten that again in order to get his way. So it'll be interesting to see how Tim Cook and Apple respond to this, as Tim Cook kind of bowed down to Elon really quickly last time he threatened them. So we'll keep an eye on this story, and it's interesting. Some people speculate that Tesla or even X come out with their own smartphone, and wouldn't it be interesting? I could tell you right now, as a smartphone consumer myself, I would seriously consider an X smartphone. If it pretty much had all the same features as an iPhone, even a similar price or even a higher price, I would pay it, especially if it came with free Starlink. In other words, you could roam the entire Earth with internet, not having to worry about connectivity, finding Wi-Fi and all that, and I'd imagine it'd be much stronger safeguards with privacy, data sharing, communications, finances, all of that stuff. I think there is something there. Not saying we're going to see this anytime soon. However, Elon certainly has the capital and the audience and fans to be able to pull off a product like that. And he's trying to turn X into the everything app, not just for social media, but for communication, calling, finance. And don't forget, Elon understands the world of money really good. He helped to create PayPal, which some call the bank of the internet. And who knows, he may even do something with crypto as well, Dogecoin. And so it's certainly interesting, and we shouldn't rule out the possibility of a smartphone from X, especially if Apple doesn't do what he wants them to, as apparently he feels pretty threatened by it. Anyway, there's a look at the Apple stock price today. Pretty bearish candle there, actually pinging off that resistance zone that I initially thought. However, we'll see whether this holds, but looking at first impressions, the street doesn't seem overly impressed with what they heard from Apple today. It's nothing really groundbreaking. I mean, the ability to create new emojis, integrating ChatGPT, it's not exactly mind-blowing stuff for a $3 trillion company. Doing a bit better was Microsoft, actually finishing up about 1% and not too far from all-time highs either. The other big event in markets today was Nvidia's 10-for-1 stock split, which took effect after Friday's closing bell. Stock closed at 12.08 on Friday, and the amount of shares on the register multiplied by 10 now. And there we can see what the stock did today. I think a bit of a glitch and misprint here on TradingView, showing a trade occurred at 195.95. I don't think so. However, we're trading at 121.79, so actually finished up a little bit today. This candle will be corrected tomorrow, and it actually goes ex-dividend tomorrow. So any shareholders on the register at close today will get that small dividend paid out later this month. Basically nothing. They just put it in there. So they're included in dividend indices, things like that. So not a huge move off their stock split, but that could still yet to be seen this week, how that plays out. Interesting, we've got a key insider in Nvidia, a director, Tench Coates. I may be mispronouncing that. However, he's a long-time insider, and he just offloaded $120 million worth of stock, which took place last week, just underneath $1,200 a share, or equivalent to about $119, where we're currently trading now. And he's a long-time director, been there since 1997, and this is on top of a huge trade he did a couple of months ago, back in early March. Offloaded $170 million worth of stock. We still haven't seen Jensen Huang show up in insider sales. Last time he offloaded was in September last year. Not a huge amount as well. So he's been riding this bull market in his own stock pretty good here. However, we may see some more insiders start to offload into these peaks, especially now after the stock split. Just stepping back and looking at the entire stock market and macro picture, we've got some saying there could be 0 rate cuts in 2024 after that hot jobs report we got on Friday. Even though pretty much all of the growth is coming from part-time jobs, nonetheless, the market reacted to it, and it wasn't what they wanted to see in order for the Fed to go ahead and start cutting soon. However, even though we're not going to get a Fed cut, doesn't mean the stock market's going to roll over. Looking back in history, the market can quite often rally going into the first cut, and that's a view I've been sticking to since October, November last year, when the Fed pivoted, said they were going to start cutting, the market ripped up, and we've been expecting the market to keep rallying into those rate cuts. But I'd agree with this article as well, that's setting up potentially a recession and crash next year when they do start cutting, most likely into a spiking unemployment rate, along with structural embedded inflation still hanging around. And that could catch a lot of people off guard, because currently Americans' expectations for stock market returns going forward in the next 12 months have been creeping back up, now at a multi-year high, like we can see in this chart here. So people starting to feel optimistic on the stock market again, and it's not hard to see why, because nothing changes people's minds like price. However, on plenty of measures, we're still not at peak bullishness, speculative bubble mania just yet. Looking at Bank of America's sell side indicator, kind of a way to measure sentiment, kind of midway between the buy and sell thresholds, not quite yet at extreme bullishness for stocks. However, for the here and now, what could keep a bit of overhead pressure on stocks is a bit of a bounce back in treasury yields, like we saw last week, just sitting there and holding today. With the market still on edge about inflation, we're still not totally in the clear as of yet. The big fall in oil, obviously going to help a lot. Still got some other commodities ripping up, shipping rates ripping up. And let's not forget the biggest driver of inflation and what is set to keep US bond yields probably structurally higher for a long time to come. Is that just looking last month? In May, the US government collected $324 billion. There's only one problem. They spent $672 billion. That creates a $348 billion deficit. They have to sell a lot of bonds to finance that deficit, keep the party going. The more supply of bonds means they have to offer higher yields to attract big money from around the world. And this is at a time when the biggest buyers of US treasuries, global central banks, are coming back to gold as a place to where they want to store their reserves. You can see that in this chart here. Back in 1980, central banks held 73% of gold versus international reserves. That's dropped way down, as for the last 30 years, US treasuries were seen as the absolute safe haven, safest place in the world you could store your money and get a guaranteed return. However, that reputation's slipping, along with that central banks decreasing the amount of reserves they have in treasuries and starting to come back to gold. And even though we heard news late last week of China pulling back, don't be fooled. They just don't want to let the price of gold run away on them, probably just helping to talk it down so they can buy the dip, as this trend is likely set to continue again for a very long time. And just getting you prepped for this week. So we just kicked off with Apple's Developers Conference. That continues to run throughout the week. We'll see what further developments and price action we get there. The big one will be Wednesday morning, 8:30 a.m. Eastern Time, when we get a look at CPI, Consumer Price Index inflation data. Economists expect core CPI to rise 3.5% year over year, while month over month, core CPI is expected to increase by 0.3%. Later on Wednesday, the Fed will meet at 2 p.m. Eastern Standard Time to decide on their interest rates. Pretty much a foregone conclusion they'll hold. And then we'll get to hear from Jay Powell come out and deliver remarks to the public at 2:30 p.m. We'll be looking to see any change of tone or language, whether he's gotten more dovish or hawkish. Thursday, we'll get usual weekly jobless claims, in addition to wholesale inflation data, producer prices, and finally, we'll finish out Friday with consumer sentiment survey from the University of Michigan. Economists expect a reading of 72.3, which would be a slight increase from last month's reading of 69.1. Goldman Sachs a little bit more optimistic, expecting a 0.25% increase in core CPI for May, with them still forecasting above average increase inflation in medical care services, housing, transportation, used cars, and the biggest pullback in public transportation and clothing. Looking out for the rest of the year, they expect the dot plot, that's what Fed members expect the trajectory of Fed rates to take, to show 2 cuts this year. They expect the first cut in September, followed by a cut every quarter to a terminal rate. That means a final finishing rate of around 3.25%. That implies 2 cuts this year, 4 more next year, and 2 more in 2026. And I'd say it's almost impossible to accurately forecast where rates are going to be in 2 years. It may even be harder forecasting the stock market because so much can affect that. However, that's what they're seeing. And they also lowered their second quarter GDP growth tracking estimate to 2.1% on weaker trade and inventories data. Moving on to commodities, we had oil bounce back to start the week off, as we did get a bit oversold last week after the OPEC meeting. They did creep back to finish the week off, and there's the big rip today, up 3.8%, back to $78 a barrel. There's a look at gold after Friday's big fall, just kind of consolidating there. And overall, the commodity complex just trying to find its footing here after getting oversold last week. And hedge fund positioning in crude oil futures is at a record low exposure, worse than 2020. And just looking at the last times we've gotten this low, back here, here, and 2020. All except for this last time back here. Most of those times were followed by at least consolidation or falls in the price of oil. So there could be some information contained in their positioning that oil could be most likely in for a period of consolidation, and who knows, we could take out some lows as well, in which case that would really help inflation picture. And if not, and if inflation's going to hang around for a while, well then, as I regularly say, one of the best sectors to be in is in land REITs, companies that own land, rent it out to farmers. A lot of the leases are indexed to inflation CPI. So in other words, they're hedged to inflation. And one land stock on my watch list, Texas Pacific Land, had a great day today after they were selected for inclusion in the S&P Mid-Cap 400 Index, which means a lot of mutual funds, index funds, ETFs are mandated to buy the stock. Of course, the algos front-run that, and that's why it ripped up 24% today on monster volume, and it's been performing pretty well so far this year. Now up about 37% year to date. And most of their land is held in the Permian Basin, where they collect royalties from oil and gas companies. Moving on, we've got a bit of drama happening in Europe on elections. With news, French President Emmanuel Macron announcing he's dissolving the National Assembly, the French Parliament's lower house, and calling an unexpected election after he got walloped in the European Union elections. Saw Belgium's Prime Minister resign, Germany's ruling party struggled, and like we're seeing in Ireland, United Kingdom, all across Europe, and possibly coming back to North America as well, there's a big resurgence for right-wing political parties and a huge pushback on the ultra-loose immigration policies we've seen across Western democracies these last few years, leading to a growing sense of unease amongst a lot of native-born citizens in those countries. And up next is Justin Trudeau, coming out of Canada, claiming that populist right-wing forces are growing around the world and choosing to instrumentalize anger, fear, division, and anxiety, as there's a growing wave of pushback from around Western democracies against the ideologies that have been pushed upon us these last couple of years, with the popular war cry of import the third world, become the third world, starting to take hold. And markets didn't like the turmoil over in France. You can see French stocks marked down there today a bit before finding their footing. And this is on top of some big moves we got last week from some big global elections. We got a lot of big elections across the world this year, with many countries swinging back from left to right. We saw that kicked off in Argentina with the return of Milei. In India last week, sold off hard. The dip was bought, ripped back up, but not in Mexico. They sold off hard after their elections and still looking pretty heavy here. Over the economic calendar, always a quiet start to the week. 10-year note auction tomorrow, inflation data from China on Wednesday, along with core inflation CPI data, then hear from the Fed in the afternoon, unemployment from Australia Thursday, PPI data from the States, another 30-year bond auction, and then the consumer sentiment survey to finish the week out. There's Fed Fund futures as we go into Wednesday's CPI report. Still pricing in a cut in November, and that could flicker around come Wednesday afternoon, especially after we hear from the Fed. Fear and greed index smack bang in the middle in the neutral zone. Corporate insiders not doing a whole lot of trading here either. That may taper off as we get into the quieter summer months as well. High yield bonds still sitting pretty. Bond market not forecasting any big major economic weakness anytime soon. There's the dollar reclaiming the 50-day VWAP. China holding on a little bit there. Bit of a bounce in clean energy today. Best performing sector today was oil and gas. XOP, bump up in crude. Worst performing sector, regional banks. Coming back down to test the support zone. Utilities bouncing off the 50-day. Momentum still the leading factor in the market. The cusp of breaking out to highs. Cannabis still trying to find support around the 770 level. Tesla still consolidating around the 50-day, and a lot of the big banks still a little bit soft here, consolidating as well. All right, guys, there we are to start the week off. Typical slow, flat, low volume, low volatility Monday. The real big one will be Wednesday, CPI and Fed data, so we may coil up tomorrow going into that, and we could get a move on Wednesday. That'll be the interesting one. And of course, we'll be following Apple, Nvidia, and GameStop as a few of the hottest stocks to watch this week. Thanks very much for tuning in, and I look forward to making you another video tomorrow night. Cheers.